Hey, good evening. Dan here. Look, I'm going back to the well. Apparently, a lot of people are really interested in how we're doing on DraftKings. So, I'll just keep going on this as long as it's still working for you. Look, at one point the stock was down a bit, never really a lot, but it was down a little bit. As volatile as this thing is, 3.5%, maybe 4%, and that's kind of a big pullback. But if you look at it in trend, in just the context of the entire trend, the stock's always doing pretty well. Any tag of the 8-day moving average, that's exponential, and it's the green line. That's really when you've wanted to buy, or at least watch it pretty darn close to make sure that it's staying in the channel. So far, it is. The stock, I bought back my short 35 calls today for a slight loss, and but that's okay because the short puts that I had were profitable by just about the same amount that I lost on my short call position. So they balanced out. I took off the upside hedge, still own the stock, and I'm still short the puts. And this is just kind of the way I think you want to trade. The toughest thing about a stock like this is it does tend to be, it's pretty volatile. And even though the stock's in a pretty big, it's a monster uptrend here. It's at $35 here. On this chart, which just goes back to last month, the stock was $13, less than $13. So this is a pretty big uptrend, and it looks like it's really easy to hold. But when the stock's up here one day and then the next day it's down almost 20%, this ain't easy to hold through. It's just not. I'd like to BS you and say that it is, but it's not. Holding the stock through a 20% pullback is just not something that you generally want to do. So it is a stock that you got to kind of trade around. And I'll say it again, the most important thing is to be having hedges and be shorting calls, shorting puts. It's called the covered strangle strategy. And you have to understand that the idea is that you're going to lose money on your hedges. So like I said, I lost money on the calls that I had sold. I sold them at a lower level, stocks up. So I lost a little bit of money, not a lot. But I lost a little bit of money, $35 strike price. So if the stock starts running through the strike price and you're short, that's when your losses will they'll kind of mount at the same time as your profits on your short puts start decelerating because the stock's getting further away. It's gamma, I'll explain it some other time. So you always want to look at your stock as your core position. That's what you're doing. You're trading stock. The calls and puts that you're selling, you're doing that literally to augment your stock position and at the same time, hedge it. If you're short a call and a put, you're going to make money on one of them. That's a guarantee. So anyway, that's it with DraftKings. I just say stay long. Any pullbacks to the 8-day moving average, you should be buying those. They don't report earnings for quite a while. So let's just keep this puppy going.